Welcome to the Quantum Leap morning pre-market analysis and trade plan setup for Friday, May the 9th, 2014. For those that don't know me, my name is Doug McKay. I am the founder and head moderator of Quantum Leap. Quantum Leap is not a commercial venture. It is a private group of traders, retail traders, helping traders. We call ourselves a self-organized learning environment. We have had a private Skype room for coming up on 5 years now, and if you're interested in checking it out, it is a Skype room, although we will be shifting it over to a regular chat room with the website for stealthtrader.com. But my contact request is Doug_McKay. I'll be the one from Windsor, Ontario, Canada. You can also send me an email if you like at d.mckay@stealthtrader.com. Each morning we come together and we go through a market analysis, setting up our trade levels and our targets and our hypotheses for the day. We do this in a macro to a micro sense, where we look at the key numbers and then drill down to the intraday, and then we do trend analysis of where we are in the different time frames within the trends before we get into any of the in-depth chart analysis. This is a routine that we go through each morning before we start trading. So if you're watching this on YouTube after the fact, you can skip ahead, but I recommend that you take the time. It usually takes between 35 and 40 minutes, but this is the type of work that you've got to be prepared to do to prepare and have a plan in place in order to be successful in trading. So before we get going, I have to get the disclaimer done, so let's do that. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Now, I did mention that we are going to get the website up. Hopefully, we're going to have the website up, stealthtrader.com, by the end of the month. And, Stealth Trader has started a new fund. It's a $2 million fund. We started trading it last Thursday. Stealth Trader had a fantastic first week, and I posted those results. Those results will be posted on our website on a daily basis, as well as we will have Stealth Trader be trading live during the live room as well. So far, for the first week, Stealth Trader is up $22,000 net in trading, and we'll make those results available on a regular basis, and I'll be posting them on Twitter as well. So let's get to our homework. Let's start with our homework sheet and take a look at the key numbers. Of course, right now we are trading above the year open at 1837.75. Our year high and all-time high is 1892.50. Our month open is 1879.50. Just let me check where we're trading right now. We are trading 68.50, right at that CLVN. Okay, this should be an interesting open. So we are below the month open, so we have a bearish month going so far. Our month high is 1886, and our month low is 1854. And that's a number that you want to keep an eye on today. Previous month open 64, we're above that. The previous month high is 92.50, our all-time high, and previous month low is 1803.25 with a close at 79.25. So we're below last month's close and this month's open. Nothing else really jumps out in terms of the macro numbers, so let's take a look at what happened yesterday. We had a Globex open yesterday at 1874.75. We had a Globex high 76.50 and a low of 68. Then we opened the RTH session at 1871.25. 28.25, had an open option in range. We talked about this after the homework session and looking at the clues that we watch on a daily basis, what the auction is giving us in terms of are we going to get a vertical development or a horizontal development day or a rotational day. And all the clues yesterday were pointing towards a rotational day. And sure enough, we broke the IB to both the high side and the low side and had a neutral day. You know, I still feel that we are coiling to make a big move in one direction or another. We just continue to stall out each time they try to break out. Our opening swing high 73.50, low 69.50 for a 4-point opening swing. And you can see that you know, anytime you get an opening swing that's greater than 2 points, that tells me that the market on open orders have disparity in what they feel is fair value, and you're likely to get two-sided action and a rotational day. Same thing with the initial balance. We had 13.25 point initial balance. The normal size of the first hour high and low is usually between 6 and 9 points. Large initial balance generally lead to a rotational day. And our high was 82.75 for the IB and 69.50 for the low. All the intraday numbers, except for the close, were higher. We had a higher 1230 number at 78.50. All times in here are in central. RTH high 84.75, one tick below our target at 85, and RTH low at 1865, one tick above our target at 1864.75. Sue me, I missed them by a tick. Our RTH close 72, and we had a VPOC shift back up higher at 81, and we left that VPOC up there. So we've got you know, the closest perceived value above us right now. Ranges for the 20-day right now are running at 16, just under 16.25 for the 20-day RTH range, just over 18 for the full session, and just under 9.5 for the Globex. So you can see that we have compressing our ranges in the full session and the RTH, and that typically is a coil factor for a major breakout. And then we had a higher value area after 3 days of lower value. We've got a lot of overlapping value areas in this area, and that's why my main hypothesis for the day is going to be, you know, especially when you get a neutral day. Neutral days generally follow neutral days or rotational days. So I'm looking for either a neutral day, a normal variation, or possibly even a neutral extreme if we get a late Friday drift to the upside. And our value area high 84.75 and value area low 73.25. And I have a different value area low, Howard, so we'll have to take a look at that, unless I wrote it down wrong. Taking a look at the daily report. Now, this report, somebody was asking me a question about this report. This homework sheet is a homework sheet that Howard developed for us, and this is something that we have and that our boot campers get, that people that take our Quantum Leap boot camp, our training program. But we do post, anybody that is in the Quantum Leap room, we do paste the results of this, and this is what we call our QLTP, and basically it has your news, it has a ladder with all the different levels that we watch based on the different methodologies. It's not a trade sheet per se, more of a guide to tell you where other traders might be executing trades at. And we look for confluence of areas between the different methodologies, because everybody's going to come to different perceived value. I mean, that's the beauty of the auction. The auction is efficient because everybody is using different methodologies to come to their perceived value in order to make trading decisions. You should be aware of where those other traders are going to take a position and look for reaction, and that's basically what we do with the QLTP, is to look for where these areas of confluence and where these areas of engagement might be. Going over to the daily report, the 20-day ATR target, so far the full session high is 72.50. I'm sorry, 72.75, and the full session low is 66.50. Our 20-day ATR target to the upside is 1884.50. Our ATR target to the low side is 1854.75. And remember, I said to keep an eye on that 54.50 area because that was the month low. That is also our ATR target to the low side. So you want to make sure that you mark that down on your chart. And then 84.75 is basically, the high from yesterday. So these two ATR targets become key levels to watch today. Looking at news, we had Canadian unemployment and Canadian rate. We've got jobs, Jolt jobs opening at 9. That's a half hour. That's Central Time. These are Central Times with wholesale inventories. So not really big news. The big news is already over for the day, but you could get reaction at that 9 o'clock Central, 10 o'clock Eastern Time. Taking a look at the naked crosses, we've got a bunch of naked crosses above us. And for those that are not familiar what a naked cross is, let me just bring this up and I'll show you what I'm talking about. It's a study that I developed a couple years ago, and we watch it on the 5, the 15, and the 30-minute for the intraday. And basically, I use the 20 SMA and the 9 EMA moving average. And a naked cross is where, I'm just going to try to find a really good example one here. Oh, nice move up. So a naked cross, for example, is, this is a good example, perfect, because I had marked this one down, and look, we just took it out. This one right here on the 5 minutes. So the 9 crossed over the 20 and left what we call a naked cross. It's like a naked VPOC. It's unauctioned territory, and you can run the study on various timelines, and you'll find that it is very rare that you leave a naked cross. The market will come back. So we use them for targets. So when we get one left, especially if you get a bunch of them together, when you get these naked crosses and clusters of them, you're likely to come up and test the naked cross. So we had one right here, and we came down and took it out at 68.50, and we left one up here at 71.50. And what do? We go up and take it out. So just keep an eye on your naked crosses. So going and taking a look at where we've got some, back to the homework sheet, and again, these will all be on your QLTP. We've got one up at 76, 79.50, 82, and 86.25. And when you get this many naked crosses above you, chances are that we're not done to the upside. They've still got unauctioned territory that they need to go and repair. So we're still, that still leads me to believe that we are going to get a move to the upside. The geometric chart today, really, I got to do a little bit of work over the weekend. I'm not really seeing anything. We've broken out. We're still in this long-term upward sloping fork in the lower channel, but this energy point that we were watching down at 42 is negated because we passed it. So I was trying to do some quick drawings to see if I could find anything interesting. I mean, right now the smaller time modified shift fork, a test of the upper line is at 73 area, which is right around that CHVN, and then a test of the lower line will be 56.41, which is going to be a test down by that 54.50 month low. But really, there's not much to guide me here. So let's just go right over to look at the macro to the micro trends. So starting off on the monthly, which I always like to do, so I always know where you are in context of the marketplace. We've got great slope and separation of the 9 and the 20. We're trading in the distribution of the prior month, and trend is very much intact on the monthly. On the weekly, we've got the same thing. We did get the first close going all the way back to the week of August the 26th, but we pop right back up, and now we're getting slope and separation, and we're trading right at the near the close from the prior week at 72.50. So the trend is very much intact. We do have a possible head and shoulder right here. If we fail from here and come down, then I'd be looking for a measured move. And if that happens, I'll draw it out and post it into the room to see where that measured move will be. On the daily is showing, just basically consolidation and coiling and chop. No true trend in place on the daily. On the intraday stuff, taking a look at the 4-hour. 4-hour, same thing. 4 hours just showing us that we're chopping back and forth and battling and coiling for a bigger move. 30 minutes, so no trend on the 4-hour. On the 30-minute, basically the same thing. We're just chopping around, so we're going sideways. So we've got no clear trend coming in. Now, what we've got here on the 5-minute is a possible technical gap against the 9. We've had a strong move up to close out that naked cross, and now price action has moved too far away from the 9 EMA, creating what we call a technical gap. And it's not going to be a Mr. Sneaky, but it could be a foo bar. This is a foo bar right here. So this is a foo bar technical gap. And technical gaps are closed either through time by going sideways, or by price by coming back down to close the gap, or a combination of both. And I would probably think they're probably going to get sideways action with a little bit of a downside move to close this technical gap right here. I would even say you're probably looking at, by the time it happens, I would say probably at that 70, 50, 70, 75 area, or if we close it through time, 69.50. Remember that CHVN at 69.50. So let's do that. Let's take a look at the big picture now on the composite. Now, I'm not going to pull it up, but I wanted to note that somebody that I respect did a comparison, and he was doing some template profiling, and he went back and templated this February 28th day, and it was very similar in shape and in action and trade action to what we had yesterday. And you can see that the day after they had that February 28th, we did make a move as a breakout move. I'm not so convinced that that's going to be the case, because you can see we gapped up overnight. We did not gap up overnight today. We're going to open auction in range. But let's take a look at the levels. Now, I know this chart gets a little bit complicated because I've got so much going on, but let me just walk you through it. The overall micro composite that I'm watching is running all the way from February the 21st through to yesterday. And the microcomposite VPOC for that period of time, let me bring it to the front, is down here at 1864.75. So that's still a major magnet to the downside if we get below the 68.28. The other reason why I mentioned that is my composite, which is this profile right here in black. This runs through to October the 9th, 2013, and you can see that the most accepted price of the composite is 64.75. So we have long-term price acceptance at 64.75, and we have intermediate time frame price acceptance at 64.75. So it's gonna act as a magnet. I am using the 68.25 as the dividing line between the current balance that we're in. So I have two profiles, okay, that are shorter time frame. One from the breakout of April the 16th through to yesterday, and that microcomposite VPOC is at 70.75. The other one I have is in the last 4 days, and that VPOC is at 68.75, just above the CLVN. The reason why is they're battling that 68.75 to hold us above and to keep value up here in this 1870. This is looking pretty ugly overall in terms of where value is. There's really fighting to, they tried to come up here to this yesterday at the 8150 and hold value. This is the microcomposite VPOC from where they went up and put the all-time new high in, and they tried to hold value there at 8150 and they couldn't, and then they had to go all the way down to that 1807 area, that where it started all right here at the microcomposite VPOC at 0750 before they worked their way back up. So what I'm looking at right now is we've got some key levels here. You've got obviously the 70.75. That's going to be the most important level today, and I think that's where we're going to see some chop. We've got a bunch of wicks and tails, okay, and we have them to the upside and we have them to the downside. And I think that we're going to have a rotational day, and we're going to test both sides of this. So my main hypothesis, okay, oh, and there's one third one that I wanted to draw in here so you can see this level too. So let me just do that. And it's when we came up to these days right here, okay, where we had the microcomposite VPOC up here at 75. So what I'm looking for is above 68.25, you want to stay long, okay, and try to trade to the upside, because I think that will rotate up and rotate the other side of balance around the 70.75, with 72.50 being your immediate target, and then that 75 that we tried to hold on the last move up. And then the other side of balance is 76, and 76 is the dividing LVN between the double distribution day yesterday. And I'll bring that up in a minute. And then if we can break about above 76, then I think we test the value area high up here at 79.25 and make a run for that 8150 with 85.75. Remember that 84.50 is the 20-day ATR target, with the last swing high at 85.75 in the RTH session. So if we break above that 76, I think we get a Friday afternoon drift up into test these levels at 79.50, 81.50, and possibly even 84.50 or 85. But I'd be waiting for that to happen later in the afternoon. The overall longer-term value area high is this 76. And again, that 76 is going to be a key level above us right now, because it is the LVN from yesterday's double distribution. It's also the value area high for the big time frame of the microcomposite that goes back to that February 21st. Of course, below us, we've got the 69.75, and then we've got a key level right now at 68.25. If we get below 68.25, sell into the 64.75. And push down through to the other side of balance around that 64.75. You've got the value area low at 61.25. And then you've got that 59.50, and then the big number below us right now is going to be back down here at this 58.25. And you can see how these same numbers keep playing out for within different context, each day. Of course, if we break below the 58, I'd be looking for a push down to test the range low, and and be chopping around in the lower wicks here, getting stuck in the wicks. But if we break below 55, then I'd be looking for a rotation down to the 54.75, which is the 20-day ATR target. But the big number below us is going to be this 49 again, this 49.50. 50. But I'm not anticipating a real big breakout today. I think that for the majority of the day, if we do break 68, we chop around between the range of 55 and a quarter and this 72.50. If we hold above 68, then I think we chop around in this upper zone with 79 and 81 as the upper boundaries. I don't think we're going to get the breakout today. But let's just go and take a look at overnight and move our numbers over to our chart so we can set up our levels and put our hypotheses in place. So the overnight high so far is up here at 72.75. You've got the overnight low at 66.50. And you've got the current VPOC. Could shift. We still have some time, but I don't think it will, at 69 and a quarter. All right, so we can get rid of this. We can expand this out. We can move this over. All right, so what do we've got? We're currently going to open in the lower distribution. Okay, here's the double distribution that I've talked about. Now we had a neutral day. Neutral day begats a neutral day. Generally you're going to have a rotation day after a rotation day. Now we've got a double distribution day. What does a double distribution day tell you? Double distribution days are usually tested on both sides of the distribution, okay, within the next couple sessions. So we've got this double distribution that also happens to be right at the range high, okay, and that key microcomposite VPOC that was 75 and the VPOC from, I think, Tuesday, doesn't matter what day. It was a naked VPOC that we closed out the other day, or yesterday, that had been left naked. But it is right there at this LVN between the two distributions. So my main trade area to the upside is going to be this 75, 76 area. I'm going to actually put it at 75, 75 because I want to break out of the prior day range and get above, this 76 CLVN. Above 76, then I'd be looking for a rotation up with the first, target being right here at that 78.75. It was the swing low off of the VWAP, and it's also that CHVN area, and just below the value area high of that microcomposite that I was just talking about. So the first target above 76 is going to be that 78.75 that I'll be looking for. With a continuation, and there's really nothing here to hold us. There's no real resistance between the 78.75 except for that 79, and I don't think it's strong enough to hold us in. So I really, if we get into this upper distribution, I'd be looking for a move up as your main target above at 81.50. 81.75. I'm going to use 81.50 because it will take it off of the VPOC, the naked VPOC, and it was the microcomposite VPOC where they tried to hold value after making that new high. And then above that, you've got the IB high from 82.75, but you can see there's nothing really here holding us, back. There's no, if the sellers don't step in at 81.50. then we're likely to drift up, and I'd be looking for a move. Remember, our 20-day ATR target is 1884.50, which is just one tick below the value area high and the range high from yesterday. So this would be where I'd be looking for, the next spot for responsive sellers to step in. And if we break above that, then you've got the 85.75 as your target. I would use 86 simply because that's the swing high, Come on. I want to use the button. 86. But the big target above us is that 9250, and there's really nothing to hold us if we start drifting. So 9250, and then of course, you know, the centennial number up at 1900. Not really, you know, that's a secondary hypothesis that we get a breakout above that 86. Below the 76, okay, you've got the overnight high here at 72.75. We're going to open in this this lower distribution. The naked close is going to be 72. So we're likely, and we've got yesterday's value area low here at 71.25. Now, Howard, can you do a download on yours? Because I know you put 73.50. I've got 71.25, or 71.50. No, I've got 71.25. I want to make sure we get the proper number here. But we've got the the value area low from the prior day. So what I'd be doing is I'd be looking for if they get inside of the value area. For them, remember we have a 96% probability of taking out the overnight high or the overnight low. And we're closer to the overnight high, and we're above this key level at 68.25. So if we hold 68.25 on the open and we break inside of the 71.25, we're getting back inside of value from yesterday, but more importantly, we're also getting outside of value from Wednesday as well. So I'd be using this 71.50 as a trade area, and if we get above it, I won't short off of it, but I will get long above it. Come on. Because then you're outside of the Thursday, or the, what day is it today? The Wednesday value area high and inside of yesterday's value area low. And that would give me a very strong probability that we go up and take out the naked close the gap, and the overnight high. And they may even do this prior to the market opening. So if you see a move in the between now and the RTH open, and we get above the 71.25, I take the long into the 72.75. I wouldn't be afraid to take that trade, because they're likely to either go up and make a new overnight high, or put them in a position of breaking that 72.75 and testing that 75, 76 area. To the low side, we've got the overnight VPOC. We've got Wednesday's VPOC. It's no longer naked at 68.50, but we've got that 68.25, and the 68.25 is going to be a major area that I would do business off of right here. Stupid buttons. All right, so if we don't hold 60, I would take a long off of 68.25. If we came down here and we rejected it, and I'd get long into a retest of the value area low and the hypothesis that I just ran through. But if we break 68.25, then I would short the heck out of this, and look for a move to take out that 66.50 overnight low, and test the range low and come down to our major magnet below here at 64.75, and this will be my major target below again. And I'm going to put it right at 65. That way I don't miss it. I missed it by one tick yesterday. That was okay though. That's a tick amongst friends. Edit. And I'm going to put the same thing. This is a major magnet below 68.25. I heard you, did you check your value area lows? Did you do download?
Yeah, this morning it was showing 71 and a quarter, but last night it was showing 73 and a half, so I don't know why.
Okay, just wanted to, hey, that's what we do. We verify things. That's why we both look at it, and always good to have a trading buddy with you to be your second eyes. Oh, didn't want to do that. To be your second eyes and ears, and to verify that your data is correct. And that's why Howard and I have been together for a few years now. All right, so below 65, okay, and 64.75, I'm anticipating a lot of chop in this area, but the targets below are not going to be much different than what we've seen before. That 61.50, remember the 61.50? Keeps coming into play. All right, and then with 59.50, you could even use 60, but I'm going to use 59.50 because I'd rather have the extreme as an area where you could get responsive buyers stepping in with the target below at 58.50. I know that's pretty tight, but you know, if we get down in this area, I'm expecting a lot of chop back and forth and getting stuck in this these wicks below us here. With 55 and a quarter, and then you've got the range low, the month low, and our 20-day ATR target to the downside, all in this this 54. I'm using 55 and a quarter simply because that's the CLVN, and I'd rather front run it against this 54. And then below that, you know, if we get below, this actually is a target, but it's a trade area too. So let me just change that. Remember, trade areas are targets, okay, but they're also areas that I will execute trades. So I'm looking for a reaction in that area, so they're naturally a target, but if they break through or reject off, those are the areas. I don't do business at targets. I do business at trade areas. And then if we break below 55, we've got 49, and I left all the lower targets in place because you've got that 43.50, you've got the 39.75 with the 39 CLVN, and the year open at 37.75 and the naked VPOC. And then down here, you know, we get into this triple distribution zone that is still an area that I think we're going to come back and chop around to, and those are the same numbers, 35 and a quarter, 29.50, and 25 and a quarter. So that's what I'm looking at. Those are my hypotheses. Now let's take a look at what it looks like on the Keltner right now. I know I'm running out of time. Center line on the Keltner is 69.75, so below that you're testing that 69.50 and 68 and a quarter. A test of the lower Keltner line will take us down to 63.75, but by the time we get there, I imagine it's going to be 64.75, which is that key magnet. And then test of the upper Keltner, if we stay above the center line, will take us up into that 75, 75, or the 76 level. See how the levels play out. Now, just a quick note on gold, because I am running long. See how this technical gap, there's the tech gap. We moved too high, and then we're closing through a combination of price and time. And where did I say we'd likely close it out at? 70.50. So just a little bit of insight to what I was talking about earlier on how a tech gap will close through time or price, or a combination of both. This is a combination of both price and time. Going over to gold, I think it's important that I don't know why this chart is not being real responsive. Come on. All right, so gold right now I think is at a very interesting situation. If we get above the 20 SMA, we're going to be testing that 1300. And we've been following this gold, and I've been trading this, and we had this major descending broadening wedge. That's a major bottoming pattern. Then we had the breakout, we hit our targets, it was a beautiful trade, and in doing that, it also set up this this larger cup and handle. And we've come down and we've validated the cup and handle pattern. It has not been invalidated by breaking below. I still think this pattern is valid all the way down to 61, even 58, but right now we're trading right in between the 61.8 and the 38.2. But if we get, and I'm a buyer of gold down here, if we get above this 1298 level, which is the 20 SMA, and we break above that 1300, I would get long gold into 1310, 1315. And I would even think that it's going to be a bigger move off of that. I think your next big target above that 1315 is up here at 1331. And of course, you all know what my thoughts are. If we break above 1400, that we've got a measured move all the way up to 1600 on gold. And I think that this fits very much in line with the overall market structure right now, because we're looking for a bigger move. I'm looking for this blow off top and then a much bigger retracement down. We've had 6-year bull run. It can't go on forever. I still think we see the 1900s before that happens, and I'm going to be positioning myself to be in a major short position when this happens on the indices, and I'm going to be in a major position on gold to the upside, because that's what I believe we're coming into. All the signs are pointing out to this. I talked about this I had a special homework session 2 Fridays ago, I think it was, and I talked all about this on how the comparisons are setting up perfectly for the last big move that we had. Anyway, I'm going to leave you with that. As always, where are we trading right now? Let's just take a look at if anything has really changed. So we're still trading inside the lower distribution, in around that CL, or the microcomposite VPOC at 70.75, and I would look for that move above 71.25, or a move down to test that 68. And those would be, I would not try to enter a trade, okay, in between 71.25 and 68.25. It's just too dangerous. It's going to be choppy in this lower distribution. Give yourself the high probability of the takeout of the overnight high above the value area low, or the takeout of the overnight low below the CLVN at 68.25, down to that takeout that 66.50. I've got a meeting that I've got to get prepared for, so I'm not going to stick around and call the market, and I'm not going to keep the charts open today, because I've got to utilize my screens for some other business. So everyone, take care, have a great day, and we'll catch you on Monday. Trade safe.